Hello and welcome to Winner Take All. We've got a special episode today with special guest Rena Tabal from Blue Pallet. She is the Director of Product Management, Financial and Blockchain Technology. Thanks for being here, Rena.
Thanks for having me.
So we've also got our regular host here, Alex, and myself, Managing Director at Applico. Thanks for joining, Alex.
Great to be here.
So for today, I think we've got a special focus. Blue Pallet is a leading chemicals marketplace, but they've also built out some pretty interesting things on the fintech and finance side. We had recently the founder and CEO of Blue Pallet, Scott Barrows. I hosted a webinar with him on B2B payments and trade credit. And Scott kind of went through there the solution of Blue Pallet is built. But Rena, can you tell us a little bit about what Blue Pallet is and what makes your solution unique in this space?
Yeah, for sure. So you covered it a little bit. Blue Pallet is essentially a market network platform designed specifically for the chemical sector. So if you can imagine, we have members who are both buyers and sellers, and they can either go on the platform and procure chemical products, or they can actually bring their existing chemical product inventory and create listings on the platform, essentially to open up more sales channels for their product offerings. But the unique thing about Blue Pallet is that it's actually integrated with logistics and also payment capabilities, which is the fintech aspect that you mentioned, and most of the work that I'm involved with day to day. And ultimately, for those who don't know, like the history of Blue Pallet and how it came together, it actually was a merger between two former companies before I joined, actually. And the two companies was Veloci, which historically was a fintech platform, and they were exploring B2B payments. And then on the flip side, there was the second company, Ecosystem, and that was built as a permission-based marketplace, specifically for the chemical industry, but more with a focus on chemical distributors. And so I believe they met at the onset of COVID in 2020, and it was through a mutual contact. And if you can imagine, Ecosystem didn't have a payments capability solution on the platform. And so enter Veloci, the fintech solution. And that's what really came together to form Blue Pallet. And they actually hadn't met in person until I think it was maybe early in 2021. But the beauty about that relationship and that partnership is that there was already a lot of interest from international trading companies in the industrial space. And so we really had the ability to learn from different processes within those international trading companies and what the challenges were from, a fintech perspective, whether it was payments, whether it was financing. And so today, Blue Pallet is uniquely positioned with our payment capabilities. And it's something that we're continuing to improve upon and to grow with being able to, accept all forms of payment, whether it's ACH, international wires, credit cards, and then, as you mentioned, Nick, the financing capabilities, which Scott may have mentioned in an earlier podcast, with the buy now, pay later functionality as an option for our buyers. But then also on the flip side for our sellers, later this year, we will have the capability for invoice factoring solutions.
Good. Tell us a little bit more about that. Why is it important to have that solution both for the buyer side and the seller side, and what does that look like?
Yeah, definitely. So I think one of the main conversation points that we had with various members on the platform is the issue with cash flow being a problem. So, intuitively with buy now, pay later options for buyers are really looking for that B2C like checkout experience. And so in the B2B space, a buy now, pay later functionality, which is more so called extended net terms, is something that we felt would be very valuable. And we're already seeing a lot of interest and adoption with that. On the flip side too, we wanted to make it a fair and democratic approach for all of our members. The sellers also have issues with cash flow. And if you can imagine, sellers are usually having to wait until these net terms execute for a number of different, transactional conditions to be met. So giving them the solution to have their invoices paid, within the first few days of having a shipment confirmed is extremely useful for them to free up that cash flow for other product inventory and options that they have. So it only makes sense to be able to have that experience on both the buyer and supplier side.
Got it. So you just see this as kind of democratizing the sort of leveling the playing field for sort of sellers in the chemical space. If I'm a big producer today, I can get trade credit. Is this kind of unlocking that for the rest of the market?
Yeah, absolutely. And I think, it's really unlocking that more so for your smaller producers and your smaller distributors, where they may not have a lot of that credit history or financial history that would enable them to be able to qualify for solutions like that. So Blue Pallet did a lot of the work in onboarding with our specific vendors that we work with to offer these solutions, so that when they come onto the platform, they don't have to go through that rigorous onboarding process with these financial providers. That's all of the legwork that we would have done in the very beginning. And it is unlocking, like you said, that cash flow for them at the smaller level and medium level and enterprises as well.
Great. And what do you see as kind of the killer feature set for this trade credit, for marketplaces in general, in B2B? Why is this kind of taking off, and what are kind of the core features there from your point of view?
Yeah, so I think what we've noticed with Blue Pallet specifically, we started off with net 30 as being the default payment terms. And I think that's just purely from discussions with various members in the industry, and that almost is table stakes. And now you're seeing in the last year or so, and really propelling into the rest of 22, the buy now, pay later functionality is very much table stakes as well. And so our members, they expect it, but I would say it's not necessarily traditional in the chemical space. And so even when, we were looking to integrate with a partner to help us with the solution, what we found is we were proposing the idea to a few companies to pilot it with us. And it was something that they hadn't taken advantage of before. But as soon as you sell it to them as, Blue Pallet's going to take a cut of that fee in the very beginning. If you pilot it for us, we are going to streamline that user experience for you. It almost feels like a no-brainer. And on the seller side, that's applicable as well. But the improved cash flow is obviously for different purposes, depending on which end of the spectrum you're on, whether you're the buyer or the seller.
Great. So net terms is kind of one of the key features today. What do you see, looking a little bit further out, sort of where do you see this space heading? Net terms is kind of the core feature today. What is the kind of fintech solution of tomorrow start to look like?
Yeah, so I actually think there's going to be more of a focus on programmatic payouts or payments being triggered programmatically. So that's obviously with code versus having any manual inputs involved. And that's an interesting, future focus, because once you talk about programmatic payments, there's obviously going to be a little bit less reliance on net terms. A lot of the times net terms are actually used because you're waiting on specific transactional conditions to be met. And so it's interesting to see that if we move to a more programmatic approach to executing payments, then you may actually have less net terms reliance. Having said that, though, I see in the future, and this is something that we've had discussions internally with the rest of the founding team, Blue Pallet will really become also a secondary marketplace for financial services, kind of like, that commoditized, limitless options of financial services available to members. So while today we may have specific, partners that we're working with to offer buy now, pay later, or invoice factoring, in the future, potentially, we could see that there's competition amongst various providers, and you can actually choose what experience works best for you. If it comes down to a specific, partner that you're looking to take advantage of, or if it's just simply down to a rate that works better for your business model.
Got it. So what you're talking about is sort of creating an ecosystem of financial services, and that there will be competing approaches essentially to how you aid B2B transactions.
Yeah, exactly. I think, the whole goal around the checkout and payments experience specifically, because that's really the driver of the fintech part of the platform, is that it's almost like an all-inclusive end-to-end experience. So you have the ability to pay in any way that you choose. Like I mentioned, we're already going to be adding the functionality and capabilities for credit cards, wires. ACH is already on the platform today. And then, if you have multiple vendors for financing or factoring, then that's the competitive nature of a second marketplace. And that option should really be up to the members. And that's the experience that we're looking to create.
Why do you think marketplaces, B2B marketplaces in particular, have been the ones that started to kind of adopt these features before, for example, distributors in the industry? Why has that been kind of the locus of this fintech innovation?
If I had to say at the top of my head, I think there's a lot of work that goes behind the scenes in actually selecting the right vendor. And it's not necessarily, something that a distributor might want to go into. They might feel like it's a lot of legwork from a compliance perspective, from a financial perspective. Typically, you usually have to have a registration or some sort of a license to be able to offer these sort of products on your platform if you're not the one actually building it in-house. So it really depends on kind of which approach you're willing to take. Do you want to party with or partner with a party that's going to provide these services, or do you want to build it in-house? And there's different amounts of legwork that are involved in choosing one or the other channel. In the case of Blue Palette, we obviously chose to partner with a financial services provider to help us with this. But that's not to say that in the future, if we find that the partners that we're engaged with aren't offering our clients the right experience, that we might actually consider to build it in-house. But for right now, it's actually a lot of work to build and manage that marketplace component. Once you think about things like the underlying technology and the financial aspect of it, in addition to the regulatory compliance aspect of it, there's a lot of work, and you need dedicated experts who have experience in the space to actually drive that innovation or that partnership. And so it can be quite daunting, but both avenues are certainly possible, which I mentioned was the partnership or either building it in-house. But I think, for a distributor, that's something that they really need to consider, like what route are they willing to take? And, what sort of resources are they able to actually throw into it, whether it's monetary or the right experts on the team who can execute a solution for their members or their customers.
And how does international trade complicate the picture when you start to get to cross-border, for example? The chemical industry is a very international business. So how does that complicate things from the fintech side, and what additional work is needed there?
This is actually kind of what I'm tackling day in and day out since I joined Blue Palette last March. It's huge. I mean, if you think about international trade, and then you kind of add in the complexity of the chemical space being a highly regulated space, there are so many players involved in the process, not just your, simple transaction flow of a buyer and a seller and potentially a bank. There's logistics carriers, there's the ports, the trade ports, and then you're talking about the traditional finance networks and payment solutions that I would say, coming from the traditional finance space, make it extremely difficult for transactions to be executed in a timely manner, in a low-cost way. And so I think the challenges are multiple players. There's the actual product itself. And there's so many flows of information that are quite fragmented and lying in different systems of these different players. And those information flows, whether it's inventory flows or financial flows, they're not really stored in a place that everyone can see it visibly or transparently, depending on what level of information you require for something like, reconciling invoices or reconciling payments or just tracking shipment and delivery. I mean, we've seen firsthand, everything that happened with the pandemic, and then now with, the invasion of Ukraine. And there's just so much happening with the supply chain, and it it definitely is obviously having an impact on the chemical industry as well as other industries alike. And so it adds so much complexity to that end-to-end process of the supply chain. And I think the biggest pain point is obviously data transparency and visibility, I think.
So supply chain, definitely a big topic, and one where Blue Pallet has also developed a solution. Tell us a little bit about TradePass and why that's also an integral part of the Blue Pallet ecosystem.
Yeah, absolutely. TradePass is, the way that I like to describe it, is like a digital passport for members coming onto the platform. And it's a really powerful tool because it's providing, members on the platform with the ability to know that they've gone through a very rigorous onboarding process. We take a lot of pride in terms of allowing vetted members on the platform through having a trade pass. We're assessing, whether your business is legitimate, the ownership of your business is legitimate. We've done the appropriate, credit checks, verifying that you have specific insurance to mitigate any, insurance liability risk. And there's also other elements where we're assessing your overall risk profile. And it really does give assurance to other businesses that you've been vetted and ensuring compliance with even standard regulatory requirements, that you may be familiar with. And I think a lot of businesses are familiar with that: know your customer, know your business, anti-money laundering standards, and things of that nature. But on the flip side as well, it's also sort of like a document repository for simplified reporting to ensure, regulatory compliance with various entities, whether it's, the EPA or Occupational Health and Safety Association. And so we've really made it a powerful tool to house all of the information about your businesses in a way that's accessible to other members on the platform. And the unique thing about it too is that once you get your Trade Pass ID and you connect with other members, you can feel comfortable in seeing, certain facets of the information about your business that this person wants to engage in a business transaction with you. And that's a powerful business relationship you can have, for many years to come. And I think Trade Pass is revolutionary for Blue Pallet. And I do believe in the future it can be used for many other business models because of its risk assessment ability and security functionality as well.
Looking ahead, where do you see the kind of main areas where you think sort of supply chain transparency is going to be of impact in the chemical industry?
Yeah, that's a good question. I think, the first word that comes up in my mind is, blockchain technology and innovation. And for those, who may not be familiar with blockchain, although I feel like it's such a buzzword now, it's what I like to say, a cultural paradigm shift in the way that information is shared. And as I mentioned before, supply chain visibility is very difficult. I think the global supply chain is very broken and it's very fragmented. And blockchain, because of the technology that it employs, it's effectively like a shared immutable ledger that facilitates this process of recording transactions or tracking assets like chemical products in a business network. And so the technology inherently, it's open, it's immutable, it's auditable, and it's very secure. And so I think that, there's an opportunity for Blue Pallet to look into using blockchain technology to help facilitate greater visibility in the supply chain. And also one thing I would mention too is there's a lot of, conversation about, climate change and scope 3 emissions, or just understanding the environmental footprint of various products. And I think that's also relevant in the chemical space as well as other spaces, to be able to track, the raw materials from source to end use consumption. It's very difficult to do today. And it involves, your ERP systems or also auditors coming in to manually do it. So if we have a network like a blockchain network where participants involved in the process are all able to validate and verify specific materials that are going from source to end use, it's a powerful way of just opening up the entire window of what is being able to be tracked and traced. And at the end of the day, as a buyer coming onto Blue Palette and you're looking at a product that's, showing explicitly, what is the water usage of that specific chemical or product? What are the CO2 emissions? I mean, that would allow consumers to make very informed decisions about the types of products that they actually want to be procuring. And then I think a lot of companies, are also very much aware that consumers want this and they want to be a part of implementing that solution. And we should be able to give them a way to do that and say, hey, we work at this company as a supplier and we take the circular economy very seriously, and we want to promote our sustainable products or our more green products and things of that nature. So it really just opens up the ability to see end to end, what the environmental footprint of a product is.
Great. And one of the challenges with any kind of blockchain or ecosystem solution is adoption. You've got Walmart, for example, that kind of mandated for its fresh green suppliers. Well, I'll have to use this solution and they can pull it off because they're Walmart and they've got a lot of heft. And if you want them to buy from you, now you have to use this technology. How do you think about, for those of us in the world that are not Walmart, how do you think of overcoming that challenge, and where do you think the kind of the big challenges are there?
Yeah, that's actually the biggest pain point, I would say, is specifically to how Blue Palette is approaching integrating a blockchain utility on the platform. One thing I've learned is in speaking to some of these companies, they are very much used to a traditional way of doing things. So with blockchain in particular, I think the supply chain visibility component of that utility on the platform may be a little bit far out for us. But what I do think might be more feasible for our members to adopt is something like a stable coin payment or blockchain enabled payment solutions. That I think is more realistic from an adoption perspective. And I say that because obviously members already have ways of making payments, albeit they can be pretty antiquated, or at least I call them antiquated. We're talking about like paying by invoice. And ACH and international wire is actually pretty big stuff to be able to do for players in the space. So using something like a stablecoin payment and introducing our members on the platform to something like that would be kind of an inch forward into the space and having them become more familiar and comfortable with the technology. And so that's one of the things that we're exploring first. And the approach that we're taking from this perspective of introducing blockchain is to start with something smaller until we can kind of dive deeper into more of the bigger blockchain utility cases like supply chain visibility. So it's really just making them feel comfortable. We do more pilot programs, which I think is very helpful to get companies on board that way. That way they feel like they're having a say in what the user experience will look like. And I think it just takes one or two good examples to be able to, improve the experience and also share the experience and have other members eventually come on board as well. But you're right, adoption is the biggest piece when it comes to blockchain utility.
What are the role of kind of banks and traditional financial institutions in this ecosystem? Do you see them playing a big role today? Do you see them playing a big role in the future? What's their kind of position here?
Yeah, so when it comes to blockchain, I think banks and fintechs, I'll speak more to banks because they're more traditional in a sense. And it's one of the reasons I left traditional finance so that I could venture into it in the startup space. But you will see that banks are actually starting to adopt this because it is so disruptive to traditional finance that they almost can't. What you will see, however, though, is that there is the increase in central bank digital currencies. Obviously, you saw that China would have created their own with the digital yuan, and there's many countries that are also following suit with this. So I think banks will take the approach of doing something similar to that. So it's basically just digitizing typical fiat currency. So it isn't far off from what the traditional offering is from a financial services perspective, but it is still in line with innovating and digitizing more so than they already have been. But I do think that it's something that's going to become increasingly more common and increasingly more demanded by consumers. I mean, the reality is, you know, a lot of people are becoming more comfortable with cryptocurrencies, investing in cryptocurrencies, and they want to bank with companies that are also adopting that as well, and at least looking into it. And so it's interesting because a lot of the older banks that I used to work with, they're now hiring dedicated blockchain, experts or resources to look into how they can implement it as part of their day to day. When it comes to supply chain visibility, I think there are some banks that are involved in helping to facilitate that. So it is interesting to see that there are companies out there that are already looking into it, if not heavily invested in it.
What are some of the shifts that you see happening that you think are going to drive the adoption of some of these fintech and supply chain solutions?
With respect to blockchain?
Blockchain, I think, is one example, but as you see the industry today as well, what's driving adoption here? Is there new technologies? Is it consumer demand driving, for example, I think, as you mentioned, adoption of green chemicals? What's kind of driving this shift in the industry?
Yeah, I think there's a number of things. Obviously, with the pandemic and everyone, being sent home and the increase in digitalization, there's a drive towards a more simplified payments experience. It's happening already, but there's a continued push forward on that. And it's interesting because we can already see the normalization of things like open finance or open banking. That's being more widely talked about. I think also the Internet of Things, or IoT, is a common term for people in the tech space, but I think it's becoming even more common now. And consumers are becoming more familiar with that, especially with businesses who are looking to track products using, an IoT device, whether it is like an RFID tag or a barcode or a QR code. And in your earlier example of Walmart, they've, done something very similar as well too. And then also, blockchain is another component. I think that is becoming more normalized as well. But I think also there's features and functionalities and capabilities that are just becoming more table stakes. There is a push for the digital economy, and it continues to grow. That's just obvious, and it's going to continue to happen. And so, buy now, pay later is, like I said, something that I consider as table stakes for a marketplace setting. And then on the flip side as well, the invoice factoring solution, I think, will also become table stakes too. And, obviously with things like this, the adoption there is because there's improved cash flow, and consumers want that and businesses want that. And then by default, the impact there is more pricing elasticity, and sellers can price more competitively as a result of that increased cash flow. So there are so many benefits going into, being able to adopt these technologies, which I think certainly it's the demand that's driving it as well, but it's just inherently where the economy is going and where technology is going. And then I think, payments becoming more programmable, as I mentioned before, is something not only that blockchain also solves for, but is something you can easily do with a low-code solution for businesses that are looking to take advantage of that. And then eventually, I do think, if we do move away from manual execution of transactions, there will also be less reliance on, AP, AR teams, or the accounts receivables, accounts payable teams. I think that's something that's going to be seen in the next few years as well.
Tell me a little bit more about that. How do these AR and AP teams start to get replaced by some of the technology, or at least enabled, so you don't need to do as much as you do today?
Yeah, I mean, I hesitate to say they'll be completely replaced, but I think, inherently the payments reconciliation process can be very opaque. And it goes back to the information flows and inventory flows and financial flows. And it's very difficult and time consuming and sometimes high cost to be able to do that. And so when things are done more programmatically, where they're triggered with code based on, a shipment being confirmed or a certain location being reached, then it really eliminates the need for resources or human resources having to do those manual reconciliations on their own, or having to parse through invoices in what can be multiple different systems, depending on, how large of a corporation you work for, where there are actually so many legacy systems that have different amounts of information in each of them. But if you can, interface these ledgers or systems with blockchain, then you can open up the data transparency across those various systems and just make it easier for things to flow more seamlessly end to end, which would reduce the need I see for those APR AP roles.
What does hyperinflation do to this model? These are large transaction sizes, right? So you got big dollar amounts that you're saying are being financed. So already the terms are not cheap, right? It's like slightly cheaper than a credit card. So now you get, inflation going through the roof, the Fed raising their interest rates. Does that break this model?
I mean, that's a good question, because with hyperinflation, and speaking to me, because I'm very much a big proponent of blockchain and cryptocurrencies, it could potentially in the future be a very difficult problem. I would say with features like the buy now, pay later, and those fees being, marginally lower than credit card options, they do have other, positive offerings compared to credit cards. But you're absolutely right. This problem of hyperinflation, which isn't going away, is eventually going to be an issue. And that's when I think there's going to be a much greater shift towards, digital currencies and cryptocurrencies. But, unfortunately, the adoption level.
But I mean, are your rates going up, from where they were 2 or 3 months ago, what you're charging to your business customers for this financing service? Are those fees, are your financing fees increasing?
I think inherently, eventually they would increase, but we would have to assess competitively how the business model is working with those features. It's a hard question to answer, it's black and white.
So as of yet, they haven't increased?
No, they haven't increased, no.
And so, you have a handful of funding partners, right, that are providing the capital for this. Any murmurings from them about potential increases on the horizon? If the Fed actually does what they've said, do 7 more raises this year alone, so you have a short-term interest rate of 2% in the span of 12 months. So, I mean, I would imagine they would have to raise the prices that you're ultimately, passing through to your customers, right? Like they can't keep them the same.
Yeah, you're right. I think they will eventually increase. Right now, with our vendors that we're working with, we haven't heard anything about any increases in the rates, but obviously that's something that we would have to monitor and see how that would impact the customer. And I think it also depends on, which customer. Is it a small or medium-sized customer that would be less willing to tolerate a hike in those fees versus a larger company who might be able to kind of absorb that as part of their P&L. But it's absolutely a good point. Hyperinflation is definitely going to have an impact from a fees perspective, and it is something that we're very aware of.
Any advice you would give today to someone in the distribution or B2B marketplace space that's looking on kind of implementing these fintech or trade credit solutions?
Yeah, I would say, you really have to decide what you feel comfortable with. If you have the in-house expertise to be able to launch something like this, or if you feel more comfortable with working with a partner. So like I said before, like those are kind of the two different approaches. You need to be willing to understand and figure out what you feel more comfortable in actually pursuing. Obviously, if you go down the path of building something in-house, that will take a lot more work, a lot more resource, a lot more just expertise in terms of how that actually functions. And it would also take a longer time. I think, in the case of Blue Palette, we decided to enter into a partnership, albeit we do have the fintech expertise in-house, but operating a marketplace is its own, complex challenge. But if you partner with people in the space who are dedicated to offering these solutions, you can do it so much quicker. And it's amazing how innovative and how fast-paced it is right now. These integrations are done in mere months. And even sometimes less time is involved in doing it too, depending on who you're partnering with. So it's really just seeing, what level of resource and time you're willing to put into which solution at the end of the day.
Right. And on the interest rate question, if the interest rates, as Alex kind of was asking, go up, do you think that drives potentially to other types of financing rather than kind of net terms and trade credit? And what do you see as kind of the potential alternatives there if that scenario comes to pass?
Yeah, and I mean, there's other solutions that we're offering as well at Blue Palette that are not trade credit solutions. But I think it also comes down to how much capital you have that you're able to have, housed in like a digital wallet, for example. And this is kind of just giving you an idea of one of the things that we're researching specifically for our members. If you feel comfortable and have enough capital to actually have that capital housed in a digital wallet that's accruing interest or yield in some way, shape, or form. And this is being done in the crypto space, but that could be great incentive for members to actually decide, hey, we want to keep a balance in our digital wallets at Blue Palette because we're already going to be executing transactions and continuously, buying and selling on the platform. And it just makes sense for us. And also there's the extra incentivization of actually earning money from keeping a balance in those wallets. So that's, I think, a really great alternative. And you're also not having to, deal with those hikes in interest rates or fees associated with those other options. So that's certainly something that we're looking to eventually pilot onto the platform in the next couple of years.
Well, thank you very much, Rita, for joining us here on Winner Take All today. I think great conversation and a lot of insight into what's happening around trade credit in the industry today, where the industry is going, how that's going to impact the chemical industry and B2B e-commerce and supply chain in the future. Thanks for joining us.
Thanks for having me.